Are you tired of inconsistent trades and missing out on high probability setups? Look no further, because in today's video, I'm going to break down one of the most powerful trading strategies in the game, the ICT Unicorn setup. This isn't just any setup, it's a precise combination of the turtle soup sequence, breakers, fair value gaps, and market structure that give you an edge that you've been looking for. If you want to turn your trades into consistent wins, stick around because we're about to deep dive in the exact steps that make this setup work time and time again. If you like these type of videos on these type of setups delivering from turtle soup sequences, be sure to subscribe and smash that like button. If we get 50 likes, I'll make a part 2 and we'll dive even deeper into breakers. Don't forget to comment as well. It really helps me understand what you guys want to see and where I can improve as an educator. Let's get right into it. Yeah, I'm sure you heard it a million times over. Breaker this, breaker that, FEG, unicorn strategy. This is why it actually works. Every single breaker FEG has to follow a valid turtle soup sequence. The foundation is obviously the turtle soup sequence. Say you can see the turtle soup, you see why we're delivering from, you're just not confident in taking the trade. You wait for a 5 or 15 minute breaker with an FEG, boom, you have a perfect entry. Our turtle soup refers to the liquidity grab above our previous old higher lows. Our entry often occurs after the stop raid and we find our false breakout of our range and our revert back into our range. Our sequence sets up the liquidity sweep, creating the context for the breaker FEG setup, aka the unicorn setup. What makes the breaker setup such a successful key reversal structure is because one, it is formed after a liquidity sweep. We have multiple confirmations such as displacement, our market maker model, an obvious draw on liquidity. You can also add power of 3 on there, as well as other confluences. Price must leave the range and reverse back into the range with displacement to be able to create our breaker. Fair value gaps form between the price move causing displacement and also confirming our breaker with our 5, 15 minute, even our hourly, higher time frame candle closures. High probability entries occur when price retraces into this gap. The FEG must be within a valid order block or breaker after said liquidity sweep. Of course, as always, this trade that I'm going to be recapping was taken live. We can see at 7:56 I was looking for buys going into today in the morning, and it should look like this and it should be free. So we can see I was entered in that low and posted it live time, real time inside of the Discord with this low here. Coming on to our October 22nd NQ chart on the 15 minute, we had an SMT below this obvious low with Monday's range. As we can see, we had a big higher high and a lower low indicated with these two equal lows here and just some chop inside of the range. We used this range to form liquidity above and below each side of the range with ES, SMT, and taking the opposing end of the range after reaccumulating during our pre-market session. We come into a time-based manipulation with 8:30 into our 9:30 into 10. We see if you weren't confident in this turtle soup here below this low, you could have waited until we displaced above the high, this high as well, and formed an internal FEG after reaccumulating above our old highs here and these here as well, with this internal 15-minute FEG resting inside of the breaker, which is also an hourly order block at this point, with our close at 10 right here above, and we'll see here going to the 60-minute chart with that close bullish engulfing candle, close above. No real fair value gap. We don't quite touch the body, but that 15-minute breaker / breakaway gap shows why, where we leave the lower portion of said fair value gap open, using our previous down close candles to support price higher here from the internal liquidity. Of course, with our internal to external logic, we should run above these low resistance triple equal highs, as well as we can see our market maker model with our 2 legs of consolidation into our turtle soup. So we're delivering from an SMT turtle soup sequence. We can also see our accumulation, manipulation, distribution through the high, followed by the exact same thing here, delivering from this internal breaker to external again and finishing our buy model out to Monday's high. To be able to integrate the order block, like we saw in our previous example, they are formed at the top and bottom of the move after a liquidity sweep, and order blocks are confirmed by displacement and respected by the retracement. And we only enter if price respects the order block, aligning with the breaker FEG. You won't always get this retracement to the fair value gap, and that's where we come in with breakaway gaps, and that will not be this video, but this setup is still super powerful. You guys should know the drill already with having a market maker buy or sell model framework inside of every single setup we take. We anticipate our liquidity sweep via our turtle soup before the breaker firms, and our reversal is confirmed using the MMXM framework with our time frame alignment of our weekly to our hour 4, our daily to our hour 1, hour 4 to minute 15, hour 1 to our minute 15, and an even lower time frame. Of course, these aren't exact, and you can use them to strengthen your confluence and get even more precise entries. I understand analysis paralysis is a thing, so only trade when it is the most obvious, high probability manipulation. Plain and simple, we always use power of 3 in every single setup. In the example we are using today, we saw power of 3 in multiple different ways with the pre-market accumulation manipulation distribution, but also the daily power of 3 with our Asian and London staying inside of Monday's daily range and us seeing New York AM manipulate an SMT below the low. From there, we had our reversal and went into a daily range profile where PM session was the continuation instead of having a London reversal into an AM continuation. Make it easier on yourself, focus on key sessions like London or New York for manipulation windows, and avoid entries after 10:30 to avoid price action. Obviously, after lunch is a different story into 12:30 into 1:30, but also you need to align times with key sessions and use market maker model framework as well as your power of 3 framework for optimal results. For a brief conclusion and key takeaways before we zoom in a little bit on our example, the unicorn setup stems from a turtle soup into a breaker formed with an FEG, and you can align it in a higher time frame order block. Our market maker model and power of 3 principles align and help our confluences for high probability entries. Timing, liquidity, and structure are keys to our execution. As you can see, we're on that same example, and we can see Monday's high, Monday's low, and what we're going to do is zoom a little bit in from this 15-minute structure and zoom in to our 5-minute structure. From here, we can see our reaccumulation during pre-market into our 8 open, where we see heavy displacement with a false market structure shift below our old low, with ES displacing past the previous day low with an obvious SMT below the low. There's a couple different ways you can take the breaker. You can either see this one or the lower time frame one down here. We entered inside the lower time frame order block down here after seeing our closure above these candles with an FEG and taking this order block inside of our soup. We also can enter inside of the classic turtle soup, seeing how far ES is displaced away from NQ and seeing the obvious SMT. We are going to use this line here to note the 15-minute candle closure of the 9:30 candle. What we see here via this 9:45 candle is that close via the breaker above our old high. We also see an internal 5-minute FEG, which we can then use as our breaker FEG entry to move higher. We also have this set up here and this lower time frame set up here, and that's how you can zoom in and see the market maker model above these low resistance highs, the accumulation, manipulation, distribution, as well as the overall lower time frame accumulation, manipulation, distribution, aligning with the higher time frame manipulation below the low. We can also see we have Monday's lunch low. There's no real turtle soup from Monday's lunch low. Yeah, you had this 350 soup above these highs, but we're not delivering from a real turtle soup up here. Just low resistance liquidity with a failure swing into more failure swing, trend line, low resistance liquidity. Of course, there's always more that I can add, but we'll leave it for next time. Hope you guys really enjoyed the video. Like I said at the beginning, please like, please subscribe. Leave me a comment as well as what you would like to see in the next video. What would help you out the most, what would help you improve as a trader, and what might you think other people might need. Until next time, stay safe, and I'll see you guys in the next one.